All right, good morning. Good morning, everybody. So, yesterday, Powell made some sleight of hand, mentioned that they would be willing to up the game a little bit, hitting two different 50-point rate hikes. And the market started to price that in. It's been a little bit of whiplash. If you're following along, the um, the market started to price in a 25 and then a 50, and then it went to 100, and then they said, oh wait, no, hey, the Fed's not actually that hawkish. We're going to back that off. So then they unwound all of those trades, took them down to a 25. Then we had the rate hike. Powell came out, and everybody deemed him to be kind of dovish. Markets rallied. Now he's out chipping his teeth again, and they've got to start pricing in these rate hikes that he is talking about. And so we're headed right back down again. The market moving up and down, though, is still moving exactly as it's supposed to move. We're not hitting extremes. We're not jumping off a cliff. It's not a runaway train, just consistent, persistent price action. It's just a capital rotation. But this is exactly why we continue to not have a lot of the swing trades that we would normally be posting, right? In the last couple of years that I've worked at the BB, we were constantly taking trades, and my portfolio alone would have at least 200 trades in it at any one time. But with us staying below, the 60-day moving average on the daily chart and SPY, it's kind of the filter that I use for swing trading. As long as we maintain below that level, I'm not going to rebuild the portfolio with plus 200 trades and be looking to get new long swings every day. We're just not in the market environment for that. And I don't need the extra risk. So the trades that we've been taking are much shorter in duration, hit and miss with the 0 days, running some naked puts on the futures. There's always ways to put that capital to work. Even just buying calls and puts naked rather than the verticals, so that we can hedge those calls, or at least hedge those options, because we've been buying the put side too, by selling an option against what we're buying. If you're building a whole portfolio full of spreads, the spread is already defined as your risk. You build the spread as big as what you're willing to risk. So there's not much to hedge at that point, unless you're going to aggregate your beta and hedge your entire portfolio. So, I get it. I continue to hear from people every day, hey, how come we're not sharing as many trades as we used to? Where's all the trades? I trade with real money, guys. It's not paper. It's not, just some theoretical little spreadsheet. I'm not going to go out and just randomly put on a trade just to satisfy some itch you have that you have to go get in the market. If you want a trade, ask me. I will build you trades all day long. You take any of the risks you want to take, but it's my capital. And I'll put a trade on when I see a really good reason to put a trade on. So expect this to continue to be priced in for the rest of the week. Not much of a surprise. The Ukraine situation isn't looking any better at this point than it was last week. And now there are some additional worrying concerns. There's been talk of chemical weapons. And then on Bloomberg yesterday, they were talking about hacks against the United Nations states and or the United States. Take your pick. That was on Bloomberg yesterday. It's exactly what I mentioned the other day. If America wants an excuse to enter into this war, they'll find one, right? They always have throughout history. They'll always have something or some trigger that says, well, that's a line that we can't tolerate. It's been crossed. Now we're going to jump into the war. So if that's the agenda, you and I won't know till it actually goes and and becomes a part of the thing, part of the scene. Otherwise, the markets that we see moving around based on these news is leaning in the two directions. Is this getting worse and spreading out to the United Nation states? And is there any peace talks? Those two are the main ones to keep your eye on in any sort of news. And the news that we've been using, or the aggregate news service, is Financial Juice. The free version, fine for me. I haven't talked to anybody that has a paid version, so I don't know how much better it is. But this is what I tend to use. I do recommend going in, clicking that gear icon, and turning off all the extraneous stuff that you don't want. That way, it's not showing you a bunch of junk. You know, it has like CNBC in there, and I don't know, just all kinds of junk. Just adjust it a little bit so it's not filling up with distracting you all day long. There was some phenomenal moves in the bond market yesterday. Really couldn't see where it was coming from. I want to keep your eye on that again today. The bonds and the dollar. There's always that phrase: "Our junk is better than somebody else's junk." Right? Our dollar is very often the safe haven for global assets because our dollar is basically better than somebody else's dollar. Right? What are you gonna do? Go buy the ruble? Ah, you can buy a peso? Probably not. So you can see we do have some high impact events for the day. We know they're high impact expectation because we have this dark orange bar. See those events better? We come into Market Watch, go to the calendar. If yours is really full and cluttered like this, just turn everything off and then turn on Econo Day event. I like to put these next to the times it's easier to see. We have two auctions today worth noting, the 11 and the 11:30. Keep your eye on the clock today, guys. As a day trader, I'm telling you, it's one of your most valuable tools and one that is overlooked the most. The dollar opens at 8, the bonds open at 8.20. Then we have industrial production, red book, and Richmond manufacturing. So 8, 8.20, 8.30, 8.55, and 10 o'clock. It's not too bad. By the time we get through with the entire morning, the afternoon is fair game, but there are going to be speakers again this afternoon. The Feds were in quiet mode leading up to the FOMC announcement, and now it just seems like, they're free to talk and they're talking. So they're running around all over the place. Definitely keep your eye on that. Their schedule is sometimes hard to keep track of, but if you are watching something like Finance Juice, you'll often see something that pops up and says this guy is going to be speaking at X time at this place, or they'll even share a link so you can watch the event. And what you'll also notice, if you didn't catch when an event was started, once one of those individuals start talking, they will come out and begin posting what he's saying. So you'll just see repeat posts as the person says more and more and more things that this deems relevant. So it kind of stands out. It shouldn't sneak past you. Now, this can go one of two ways when we're looking at the ES market today. We are above that 50-day moving average, which is great. We're above the 50-day. We're kind of resting on it, but this is forming a little bit of a topping pattern. Now, you kind of game it out. When you have a market that's made a significant run over 4 or 5 days, you expect a little bit of consolidation. So just the fact that we're consolidating here is normal, it's natural, it's exactly what you would expect. but it also presents as a topping pattern. So, we can call it a topping pattern when we look back afterwards and we see that the market falls and we say, yeah, that was a really nice topping pattern. But it's only a topping pattern if we fall. Because if we spike up and continue to go, then it was just a flag and that was a consolidation period. And again, you don't know for sure until you look back afterwards when we're no longer in that box. A couple of things that you can look at though to kind of try to validate, is it really a topping pattern, is it kind of go into a higher time frame. Say I'm on the 30-minute, we could go to a 2-hour or a 4-hour and begin looking for reversal candles. um, Say a shooting star, inverted hammer, dojis, anything that would give us some kind of reversal signal that this is going to fall, or a continuation signal. So for a continuation signal, although it's not a very clean one, this is a head and shoulders in a way, inverted, right? There's your left shoulder, your head, and your right shoulder. It's a very squished, ugly looking head and shoulder, but it's there. When it comes to a head and shoulders, you can plot out the expected move. That would put us at 44.90 and then 45.16, basically the 45 cog line. Now, again, we don't know if it's a topping pattern or a consolidation pattern. And anybody who says they know, well, I mean, hey, goody for them. Let's see what trade they put on. We can very easily mark out our levels and our ranges. Yesterday's range was a very muted range, and it covers everything. It covers the Globex of today. It covers the Globex of yesterday. So you've got more than 36 hours of price action all wound up into that tiny little box. Not so tiny, but still the little itty bitty box there. One way to identify, is today likely to be a range day? Well, if we stay inside that price action, it is. Now you can tighten this up into different zones. One zone would be the low of the Globex today. It gives you a much smaller box to focus on. And then you can even take that a step farther and you can focus on the most immediate balance zone. Universal pivot points, yesterday's high, Globex low, yesterday's low. Those three levels are the ones that matter. And if you wanted to add one more, either the close of yesterday or the open of the Globex. You can see how that almost breaks us down into quarters. Nice little quadrant lines. Almost as if we used the quadrant tool. Not quite at the 25, not quite at the 75. That close, though, was spot on. Then it also adds the midpoint. It's very likely we're going to continue to see the market shaking up as the Fed continues its discussions. Yesterday, it was Bosick and Powell. Not quite sure, who's all on the list today. I haven't seen it. You may want to just not participate if we stay in this range. Look for it to break the edges. You can set an alert on each side and look to see a breakdown in the market and kind of game that theory out, right? If we break to the upside, what would it look like? If we break to the downside, what would it look like? Now, to the downside, we do have that 50-period moving average. We're going to look for that to be support, just like it was yesterday, right? And you can see we went completely through it yesterday. So it wasn't like we got down there and touched it and bounced right off of it. We punctured it. depending on the time frame that you're looking at, we closed below it, but it was a tweezer bottom, right, on the 5 minute. This is really choppy, really hard to do with unless you're using just a massive stop. And nobody wants to use a massive stop in the futures, right? So then if you're not using a really big stop, then you've got to kind of try to time your trade using some sort of flow tools. Bookmap is on Thinkorswim, but this Bookmap, it's like the limited edition. It doesn't have all of the bells and whistles that the real Bookmap has. The benefit, though, and I'm going to continue to pound on this, is you can use the free version until you understand how it works. It took me a year to figure out how to use Jigsaw effectively to be able to trade with it. And I bought Jigsaw with a lifetime license, so I wasn't getting nickel and dimed month after month on using it. Right? It was worth it. But when I bought Jigsaw, Bookmap wasn't on Thinkorswim. If I had known they were going to do that, I would have gone after Bookmap. There's not a lot of education out there on how to use Bookmap on the integrated Thinkorswim platform. So not only is it limited in the tools that it will offer you, there's not a lot of education on how to use the damn thing. If you are interested in flow tools, I really can't stress enough that you want the real one. Go to Bookmap and get the real Bookmap, or go to Jigsaw. I'm not running a commercial for them guys, but when it comes to the cost of those two, I was very happy to get a lifetime license, and it had plenty of education to go with it. One, explaining why we would use Flow in the first place, and then two, how we would use Flow, and then three, how to use their platform. If you were to activate the paid version of Bookmap on your Thinkorswim, it's going to be okay, but you're not going to get all of those tools, and you're paying almost as much as what you would pay for the real Bookmap. But I don't know if Bookmap offers a lifetime license for a one-time fee. I honestly just don't know. If they don't, at least figure out how to use the darn thing for free, right? And then after you've learned it and you're using it effectively, then if you want to start paying for it, you're at least paying for something that you can use and is paying you back by helping you get effective trades. Please don't make the mistake that most of us made if you're new and just run out and buy a bunch of stuff. Right? When I was new, I had, I don't know, 30 different subscriptions to all kinds of stuff, and I didn't know how to use any of them. And I ended up not using a one because I didn't understand them. I had too many of them. Some of them were contradicting each other. This is a big waste, right? So don't make that mistake. Figure out how to use this thing. Then, if you like it and you want to spend money on it, spend money on it, right? And if you just want to go waste your money, then go ahead, go waste your money. So we're going to look to hold the 50. We'll game this out to the downside. Suppose the market doesn't like the news of the morning. We break to the downside. We get through the low of the Globex. We challenge that 50 and we break through it. What will we be focused on at that point? That would start putting us back into the box that we've been in. You can see that box relatively well if you're on a 1 hour time frame, from 4,400 to 4,100. So that's really the box that we're focused on at the moment. And from this time frame, you can see that 4460, 4470 area. That's an area of concern that we have not yet managed to get through after we broke down back in February. Right? So that's our overhead resistance. If we fail to get through that resistance and make it up to 4,500, then it's very likely we're going back inside the box. If we do break to the upside, 4,500 is our first target, and then 4,550 will be our second target. And we can validate those levels with the volume profile. Uh-oh. Come on, Thinkorswim. So you can see we got a lot of volume resistance. The volume is in green. It's volume by price. It's what we call volume support, volume nodes. we are through it. We are on the other side of it. It is supposed to help us, right? So if we start to break through it, there is a bottom to it right around the 44.40 area. If we break below that 44.40, then we're very likely going to go to the cog line 44.11. It's a real shallow area, so we should move through that with relative ease. Right? The only thing that could perhaps help a little bit are the universal pivot points. Yesterday's high, low close, weekly high, low close of last week, right? Those legacy pivot points. If we bring it into a day by day volume profile, one of the things that we want to do with these profiles is carry over the previous day's lines. Value area high, value area low, point of control. Well, we've already crossed through the point of control multiple times, so it has no validity now. We got really close to tagging yesterday's value area high, and the value area low is still unchallenged, but the value area high and low don't have a lot of validity to them to begin with, right? They're worth marking out just to see if we're going to hit something, but other than that, they're not extraordinary in their usefulness. The point of control is, but we've already passed through that level enough that it's no longer going to be a value at this point. There's no untouched lines that we need to concern ourselves with at this point. There is a point of control around the 43.50 area, but I don't think we're going to see that today. If we were, we'd be lit up like a Christmas tree, right? Things would get really negative. We would see it across the board and all the tools that we look at. There's no expectation that we're going to challenge that point of control yet, but it is an untouched point of control, a virgin point of control. And we're going to continue to carry it forward until we just completely leave it behind or it gets touched. We have another one down here, right? You can see we do end up leaving some behind that never get hit. It's fine. It's just at some point it becomes too far in the distance and doesn't matter anymore. We got the same situation happening in the NASDAQ. And again, you can narrow your zone to fit your needs, mark the Globex level, and or take it back just a little bit more. Mark all of yesterday. It's the intraday high to the intraday low. And if you were to do that, it would also cover Friday's close. Not all of Friday's price necessarily, but the close. So we're wound up relatively tight in both of these markets. It was a tech fueled rally Friday. So it really kind of brings in the point of we want to keep our eye on the fangs. And on Thinkorswim, you can make your own ETF, right? You just add a plus sign between the names that you're looking at, which is kind of cool. You can use this all kinds of ways, make your own homemade ETFs, just all kinds of stuff. What we have here, Apple, Amazon, Facebook, Nvidia, Google, Microsoft, and Netflix. So just by watching this one chart, it's like watching all of the fangs. Now, don't get me wrong, from time to time throughout the day, I go and I look at every one of those names individually, just kind of trying to get an idea of what's happening out there. But in their aggregate, this is one hell of a market to keep your eye on. Really useful, especially when you're validating a breakout in the NASDAQ or the S&P, trying to see like what's behind this push. So I want to game it out just like we were doing in the S&P. There's only two ways this is going to go, right? Well, I mean, there's three. One thing that we could do is just continue to stay sideways for another day. It's possible, not likely, right? We don't want to say that price can't do that because we know it can. It can just spend another day right here in this range. But let's set that one aside and game out the other two scenarios. We break out of the top of this thing and continue the next leg up, or we break out of the bottom of this thing and we go back inside of the hurt locker. So a break of the upside would challenge the Globex high and then the high of yesterday, which are really close together in the grand scheme of things. It's worth marking both, especially if you're looking for like a Busby play out of the top. Because if we break out of the top of the Globex range, there's your breakout. We would deflect off of yesterday's high. That's your reversal on the Busby. Brings us back down and validates the old resistance as the new support. That's your entry on the Busby. And then we run it back up to at least what it owes us, right? Can always game it out. When you get good at that, you can actually game it out for hours in advance. I used to think I was pretty good when I could do hours in advance until I met someone that could go weeks in advance. Can you imagine that? And the guy was dead accurate. Like, well, 2 Mondays from now at 11 o'clock in the afternoon, price is going to be right here after it breaks out of. Whoa. He was really, really accurate. So, you know, it's doable. You just got to pick up the skill set. So that's very likely what a topside breakout is going to look like, right? We would deflect off of yesterday's highest point. Now we know price does not stop at pivot points. It's supposed to go through, right? The liquidity is on the other side of it. So if we were drawing this out with a little bit more accuracy, we would expect price to punch through first, then fade back down. A lot of people think that the Busby is the trade, and it can be. I won't argue against it, but most trends start with a breakout. Busbys only form from the breakout. So you could say that a Busby comes before a trend. And if you were to see a Busby complete that pattern, then you're very likely about to see a trending market. Now, you could struggle to actually trade the Busby, or you could just wait for the Busby to complete to validate that we are in trend and then trade trend. Either way, do them both. But I've heard from people who really struggle to trade that Busby, quit doing the hard stuff. Do the easy stuff. So that's the top side breakout. The bottom side breakout would first involve getting through our own Globex low and then the low of yesterday. Should we manage to break through the low of yesterday, we'll focus on last Thursday's price action with the stop somewhere, a stopping point, not a stop like a market stop, with a stopping point right around that 14,000 level. And that's a critical line in the sand. There's a first touch play uh, just waiting down there to be hit. We manage to get through that level, then we'll deal with Thursday's price. Now, one thing between all of these levels is the 50-period daily moving average, which is basically right under our feet at 14,375. I'm going to drop that down to the quarter, give away the 3 points. 14,378 is what it really is. I would say 14,375. That quarter has more validity. So you're very likely going to see a very choppy day if we just sit inside of this range. It's a very simple range. Just draw out the box. You're done, right? It's that easy. Set an alert on each end. Go make cookies and wait for your alert to go off. Trade a different market, right? There's always something else that we can trade while we're waiting for this market to set up. Or trade the range in the middle, right? There's nothing wrong with range trading. Just the size of these candles right now are so big, it takes us right back into that previous discussion where you're going to need a really big stop, or you're going to need to be able to read flow really well and time your trade so that you can jump in with that flow. You can see there's just a whole mess of volume up there, different levels, a lot of trash, there's a lot of clutter. If we're to break down below 14,250, we've got a nice shallow area. So basically, if we break the low of yesterday, there's nothing holding us back from getting to the low of Friday or even into Thursday's price action, which is where we'll begin to find support again. So 14,000 is about the middle of that big volume cluster, and it gets us right back to the box. The box is your one standard deviation of price. It is where 70% of all of the volume has happened in the last 7 days. We're outside of the box, and statistically speaking, when we're outside of the box, we want to ask the question, where are we going? Are we moving closer to the box, or are we moving farther away from the box? Well, we're moving down, so we're coming back towards the box. That would be the target. If we break yesterday's low of 4,200, then we're headed to the top of the box, or we're headed to that 14,000 level. They're really close. They're right in the same area. It won't be subtle, right? Same with the top side break. Either way it goes. We get a significant break out of the top of this, you're going to see everything light up. Your advancing issues are going to be sitting in that sweet spot of around 75, 85 on the NASDAQ, and between, say, 380 and 400 on the S&P. I just use percentages. It's how I built the labels that I use to monitor these as well. So we're looking for advancing issues to sit somewhere in the high 70s, low 80s. We would see cumulative tick holding above the zero line. We would see the regular tick maintaining above the zero line. We'd have at least one of the two risk on sectors, finance or tech. And then we'd see the FANG names making that move with the market. You put all of those pieces together and you can validate the breakout or the move that you're seeing in the market. Right? It's a way to get more confirmation than just, oh, hey, this looks like a rally in the S&P. Yeah, but is it sustainable? This is how we validate. And of course, you can bring in the modified grid that we've been using, keeping your eye on oil, the bonds, the dollar, the VIX, gold, Bitcoin. If you have the chart space, you can bring back in the other two indexes, the Russell and the Dow. I just replaced those momentarily with gold and Bitcoin. Been monitoring gold as the hedge, keeping an eye on Bitcoin for a number of reasons. One of them is the not sanctions. There's another word for it. I don't know, the decree that Putin had put out about Russians getting out of the ruble and exchanging it for foreign currency. They were restricted from doing that, so they started piling into Bitcoin. That VIX is still really muted. It's becoming a little bit of a concern at this point. So you definitely want to keep your eye on the VIX. If you haven't done it yet, going through the VIX school will help a lot in understanding the different ways you can keep your eye on the VIX and how it's useful. You can see those significant moves in the bonds yesterday. I mean, it's just, it may not look like much just because of how extreme things have been, but this was a massive move in the bond market. We had the dollar being back up again, but we just got a head and shoulders, targeting back down to the Globex low of yesterday. So we want to see these two markets calm down. When you're looking at the dollar, always look at the VIX, compare those two, make sure they're not coupling together. They don't always, but when they do it, it tells us a lot more about what's going on out there. All right, let's take a look at the sectors and see what's moving this market this morning. So Thinkorswim doesn't do a really good job with pre-market material. There are some tools, it's just not very valuable ones. And the main one, the go-to that most people use is change percent. So I've got a little modified custom watch list column that does change percent, but it's not 100% accurate. It's just a nice gauge, and it's good enough for me because I've got other tools like TradingView and TrendSpider I can go over. Those are much more accurate for pre-market change percent. We're just trying to get a feel for what's out there that's been moving, where the gap is at. So Bitcoin, for an example, you can see a significant gap from the overnight hours from where it closed to where it is currently. Is it accurate as this reads? I don't know. It's close. It's good enough. It'll do. FXI, same thing. Gap up from where we closed last night. If we're going to have a rally in the S&P and the Nasdaq, then we have to have the two risk on sectors. We have to. Can't get that rally without it. So we would be looking for technology, not much of nothing. And we would be looking at finance. And of course, finance has been really beaten. Just, it's really in play right now with everything going on in the dollar and the bonds. So a nice gap up from the lows of last night. And even from, where we closed is not that bad either. Close, right? Let's check that for a red to green. So the XLF was a red day yesterday. After a trend line break, after a nice rally up, it hit its head on the 50, which is almost a sideways 50. Not a lot of validity. We've crossed through that 50 multiple times. It has no respect for the 50 at this point, but it is a red to green in an inside day. So yesterday stayed inside of Friday's range. This is just building up more and more energy, and we're looking for a red to green setup. One of the criteria is that yesterday was a red day. That fits. But we can't just run out and look at every single day that was a red day yesterday and say, oh, hey, we got this red to green setting up. My own personal criteria, one of the things that I like to see is that the morning price today has rallied up off of those lows from where we closed and is going to open at least where we opened yesterday, if not better. One of the reasons that I want to see that is it shows the pre-market interest, that there are actually people in there paying attention to it, but it also becomes a pivot point so that after we open, if the market starts to fade back down, that it would catch or land or validate that close of yesterday as a pivot point, hold it up, and help it continue that move. The way I trade these red to greens is I want to see a breakout of yesterday's level. Now, I don't necessarily need to wait for it to break yesterday's level before I get in, but it's a nice way to narrow down your list in the morning, right? We talk about that filter of stocks. You start out with a very broad amount of stocks. We want to filter them down so that as we get to the bottom of the filter, we have 2 or 3, maybe 4 names as we go into the open. And once I have those names, I like go out to the daily chart and find a daily signal that gives me more validity, more reasons to watch it. A red to green, inside day, trend line breakover, moving average breakover, something. Well, we have an inside day and a red to green setup. If We've got a pre-market rally that gets us up near or even higher than yesterday's open. So if we were to mark yesterday's open and yesterday's high and then bring that back down, you can see that we are above the open, but we failed to break out of the pre-market, which is fine. I don't like it when it runs too far, right? So this is really in the sweet spot. It's above the open, which is where I want it to be, and it didn't continue to run, breaking out of yesterday's high and keep on going. Perfect. So we want to keep our eye on this as we come into the open. We don't want it to drop back below yesterday's open, but if it does it in the pre-market, it's fine. We just don't want it to happen once we're in regular trading hours. Me and Lucian did a lot of work yesterday loading new videos. They are in the next level library in the options area. We do have futures material too, but we spent hours doing the options stuff and we were both just tired and fed up with it. So, the futures material is going to have to wait a few more days. Uh, yeah, go check it out. So energy's been working its way back up. Remember when we're talking about energy, you really want to divide it down into different categories. If you stay generic and just say energy, you're kind of cutting yourself short because there's a lot of different energy out there. So as you can see, we got a lot of markets, a lot of sectors that are up in the pre-market, but they're the capital rotation, right? When you look at the risk on, risk off, and midline sectors, the ones that are up are those other two, risk off and midline. So that move in finance, if we don't get that breakout and we don't start getting some help out of technology, then we're not going to see that rally in the S&P and the Nasdaq. We are underneath that 50. So we're going to be looking to challenge that again today. That really big box that we were looking at in the Nasdaq, well, its ETF counterpart is behind the game. It has not yet broke out of that box, but we're primed for it. We have the 50 overhead and we have a legacy pivot right over our head in XLK. It's right around that 155 area. So a break to the upside today above that 50 is going to be a game changer on the bigger side of things. Start bringing it out to the daily and the weekly. We are in a downtrend. Make no mistake about it, right? We're in a bear market. We're in a downtrend, but that's the primary trend, not the secondary trend. From that point of view, the secondary trend, I mean, we're continuing that move to the upside. But you got to ask, how many days in a row are we going to get red candles, or how many days in a row are we going to get green candles before we start to see a change in market sentiment? Even yesterday, while it is showing that it was a green day, look at where we opened and look at where we closed in relation to Friday. We gapped down between Friday and Monday, and then we rallied up higher than where we opened and closed higher. So it made that a green day. I don't necessarily consider that a green day. I do consider it an inside day, except Friday was really, really wide. And an inside day inside of a wide shadow bar like that doesn't have as much validity. I don't have as much respect for that as if it was a really narrow day followed by an inside day. The more compression, the better, right? We are at a turning point, so it needs to make or break today. Like we do every morning, want to kind of get a feel for how bullish is the market, how bearish is it. Sometime today, sweetheart. Get her done. Oh my goodness. There it goes. Take your sweet time. All right, we're looking at the S&P 500. Set it to pre-market change percent. I don't want 500 names. I'm going to knock it down as close as we can get to 100 names. 91 is good enough. Want to adjust the color scheme just so things stand out a little better. This is a really nice way to see the market. I know a lot of you really like your candle charts. You know, you want to go in and see momentum and patterns and trend and all of that. The market's a correlated market state. So when you have 90 names all moving in one direction, what do you think? Go long, right? So which names to go long in? Well, I like to play, a little bit of arbitrage. So when I see a peer group with one name in the group standing out, it's usually where I go focus my attention. And think of the idea that we're looking at 91 companies here at a glance. Now you can always dig a little deeper, but this is a really good starting point. On Thinkorswim, you have the same thing, but on Thinkorswim, you can actually put your own watch list in it. So that alpha protocol list, or even just the CBOE list that we build on a month-to-month basis, you can stick it in there and you can see the aggregate of everything that's going on at a glance. For those of you who aren't really into the quant style of trading, looking at just a bunch of numbers, this is a real handy visual cue that can give you a perspective of 100 stocks at a glance. You may find that it's easier to read than a watch list column. Just saying, it's worth looking into. I know that when I was new and I seen this, I thought, well, that's stupid. Who would ever look at that? That's worthless. But I was really shortchanging it a lot. I didn't give it the respect that it's due. It's a very, very powerful way to see an aggregate perspective of the marketplace. So you can see those financials are really lit up. The S&P has the financials, the NASDAQ 100 does not. So when we're looking at those two markets in the morning, the one thing that always stands out that we want to put extra attention into are the financials in the S&P. Not only is it one of the risk-on sectors, it's the differential between the NASDAQ and the S&P that we really want to focus on. When you're looking at the financials, try to get a sense of which financials: credit cards, lending institutions, regional banks, trading firms. So it's kind of a mixed bag. A little weakness in energy, transportation, utilities, that defense that we were talking about. Same thing with healthcare. Set this to the NASDAQ 100. Pre-market. Adjust the color scheme. Look at those FANG names that are sideways and giving us nothing. Almost every single one of them. Right? If you were to bring in, say, Netflix or Tesla, because sometimes you got FANG Man plus T, then you got a little bit of validity, but not much, right? Everything else is near flat. Amazon, Apple, Microsoft, Google, Facebook, Nvidia, nothing. We have to have those FANG names, right? We have to if we're going to see that rally in the market, or see a real good breakdown in the market, right? You see these things start to break to the downside. They're pricing in that rate hike. So it's still the old argument between value and growth. So we're looking at how many names in the S&P are up at least a half of a percent this morning. 20, 24, we'll just say 25. Nice round number. 25% of the S&P is up at least a half of a percent. That half of a percent is my starting point. If it's not up at least that much, I don't consider it to be up. Right? Same thing on the downside. It needs to be down at least a half of a percent. When we're looking through this list, we want to see what it is, right? Which sector, which industry, which sub-industry, peer group, consumer durables, finance, and a little bit of technology services, right? It's like one name, not much of nothing, and a little bit of retail trade. For the most part, it's all finance and a little bit of electronic technology up at the top. Raytheon and Lockheed Martin, they're not my first go-to when I think electronic technology, right? Look at their industry at that point, aerospace and defense. That makes a little bit more sense, especially when you see the beatdown that Boeing had yesterday, right? If somebody was looking to keep their portfolio balanced and diversified, if they were bailing out of Boeing, where are they going? Yeah, Lockheed Martin, Raytheon. It makes sense. A couple of car names are up this morning: Ford and Tesla, GM. So when you're in there, you can just as easily break it down by its industry as you can by its sector. Major banks, investment banks, brokers, retail, leasing, finance. So we always have opportunities to trade, right? Any kind of market, there's always something we can trade. We're just not looking to really load up on the 6 to 8 week swing trades, wide spreads, those kind of trades. Take it over to the NASDAQ. That's the negative side. As the positive side. So 15 names out of 100. 15% of the NASDAQ is up at least a half of a percent. Not very much in comparison with the S&P. You still want to approach it from the same perspective. What names are we seeing? What sector? What industry? Technology services. A couple of these are Chinese names. And motor vehicles, again, in the list. All right, so looking at pre-market change, one of the things that we can focus on are the legacy sectors and then our own little homemade sectors. TrendSpider does a really good job of monitoring and looking at change percent in the pre-market. This one and TradingView both. TradingView just seems limited on the lists that you can use, and TrendSpider is more forgiving, kind of lets you use whatever you want, make your own lists. So we can see that energy is trying to turn around, getting that move back up again this morning. Bitcoin still leading the way. We got that topping pattern in the Qs right underneath the critical level. Basically flat. Some of your weaker sectors: marijuana, silver, the devil's metal, gold, USO oil. And looking at the February liquidity list, more green than red, but a lot of these names aren't up even a 0.5%. So they've got some work to do. Some names that stand out are those bank names that we were talking about: JP Morgan, Bank of America, Citigroup. But also the Bitcoin names. And we have our own little homemade sector for coin, right, for crypto. So bring that list in. That's a lot of opportunities. MARA, PayPal, NVIDIA, AMD. Not too bad. Seeing the chips we're moving around, I think that may be worth taking a second look at as we get closer to the open. Yeah, we got a hammer. So it may be worth revisiting chips. We've seen a lot of the EV names this morning. That'd be a good one to focus on. Li Auto, NIO, even Ford and GM are getting in on the action this morning. When we're looking at General Motors, we did get back above the moving averages, right? So if you've seen the failed flag setup, we had that nice balance zone, that consolidation period breakout. We're very likely going to see that Busby now. And then we'll start focusing on the reciprocation back up to 54, 52, somewhere around in there. We got a red to green showing up in Ford, but it really needs to move more in the pre-market before we consider it a viable red to green setup. If we get it, however, that's going to look really good. Let's go look at that on Thinkorswim. Ford may be the play of the day. All right, so yesterday is basically an inside day. I mean, we wicked out of it through the top, but for the most part, we stayed inside of Friday's range. What we want to see this morning in the pre-market is Ford rally up off of that closing price and open at least as high as where it opened yesterday or better. And then the first target would be a breakout of yesterday's high. We're not there yet. Still has a long ways to go here in the pre-market before it gets there, but it's getting some action, and that sector is hot this morning. So it's worth keeping your eye on. And energy is still looking pretty good. So everybody be careful, be safe, and I'll see you all in the chat.